TGIF, everybody. Hope everyone had a great week with the Fed. I've heard both sides of the story. People having great weeks, people having a tough time. It's part of it. Hi, Glenn. How are you? Good day to you. So, today's the first day of summer. Let's have a great summer season. Looking forward to riding waves, helping people ride waves. All of us are, all summer long. So, surf's up in the FX market, dollar on the brink of breaking down. The lesson we learned again is when the dollar is bad, everything else is good, right? So as the dollar sold off, metals really lit up. Tremendous move to the upside. Gold did end up outperforming silver. Okay. And I see no reason to short the gold. I'd be careful with the silver here. Let's look at them since they're the stars, and then I'll come back to a couple other things I want to talk about. But here's your silver. Okay, so we had this breakout yesterday. Shows up better on the 4. Anyway, this was a nice little breakout. Some people are saying it could have been a right shoulder. Whatever it was a triangle, and we've come back to kind of test previous highs. Gold has not pulled back to any meaningful previous resistance, so looking good. Although I see a 1, I see a 2, and I believe Gregor was talking 1420 when he was here on Monday for this still being potentially a bear market rally on, in a big sense. We all know, and, Blake talked about that we were going to get this breakout and it was going to be wild, and it was wild. I mean, the Asian sessions, European sessions, wild in gold. No reason to, on a week like this, to say, oh, I'm just going to get short gold. Let's see what happens up here at 1420. It's 1.272 up here next week. But silver is definitely, look, it's down 12 cents with gold still up 760. Okay, so the dollar being the key. And the dollar, like I was showing earlier, is really just hanging on by a thread. It was an important area that it held this 200 last time, right? And where did we get a rally back to? 97.80, 97.80, 97.80. So it's set up to have one of these from here, or perhaps we get some type of extension of this decline. Basically, just arithmetically, call it 6.5 and call it 8.5 is going to give you 4.5. So this is probably where we're going this summer. Okay, and I don't think it's the end of the dollar, but the dollar has become one-sided, so I think we'll give the dollar bulls a little bit of problem here for a few months or so before the dollar resumes to the upside. So it was constructive for the S&Ps, of course. We made new highs. Talked about that happening, new highs, once we got through this 2,800 level. That was kind of a tell. A lot of, I didn't see Grega's, but you know what? I don't have to, if I miss Grega here, all I have to do is this. Okay. Now I know I don't pay for a subscription because I work with the company, but you know what? I would gladly pay $100 or so to have this at my fingertips. All right. In fact, Rega was calling for this rally in the euro when he was here, and that was before the Fed. So looks like he's calling this a 3. Return line up here at 114. Okay. I've heard 117, 118 as a possibility this summer. So it's nice to have this at your fingertips, isn't it? But I wonder if Andre's harmonic works, which, you know, is also something I don't know. See if there's some confluence here. Yeah. I mean, he had a potential
Dale?
formation. Yeah.
I'm sorry to interrupt you. Good afternoon, everyone. You need to check the 12 hours time frame chart. That is the daily time frame chart, because the next one it's a call for
This one.
That one. That one was the last one, the most recent one, because it's a lower time frame. It's a 12 hours time frame. It's a midterm.
Well, it's interesting.
It's a 2618 trade setup, and I believe some of our subscribers are already trying to get familiar with that trade setup. I'm sorry to interrupt you. Keep going.
I'm glad you did. I'm glad you did. So that's an interesting look. So there's confluence between Andre and Grega. And 12 hours, Andre, while you're here, how did you come to start paying attention to that time frame?
Well, I need something between the most common 4 hours time frame and a daily time frame.
Okay.
I don't like the 8 hours and the 6 hours time frame. I need some midterm between
Okay.
the trading sessions. Actually, if you check the 12 hours time frame candle, you will see the last 12 hours begins at the midterm of the entire session of 1 day trading. That may depend obviously on the time zone you are,
Yeah.
and the time zone you have. But
it's just interesting, and you know that you know, I'm always interested in why, you know, people use certain types of tools, how they came up with, you know, what type of moving average you're using, or what type of time frame they're using. So thanks a lot, Andre. So you have an active pattern here. I don't know if it's a pip. Were there any pips on it on the euro? Anyway, the point being, it's 10 pips on a regular, 10 to 15 pips on a one lot. Okay. So, you know, I'd give up 10, 15 pips a month to have this type of research at my fingertips. And if you're not, you know what? You're really, I think, and even if it's not us, I mean, I bring a lot of really smart people in here every week, you know, some real talented, insightful traders, analysts, mentors, whatever. But as you can tell, intelligence gathering, it's not where you go with everything you hear from somebody. You still have to do your own work, because if you become dependent on any one analyst and they retire, you're lost. But you see what you see, and then you go to, you know, Blake or Steve or Andre or Grega and see what they're seeing. And sometimes, you know, let me tell you, it doesn't show up in your account. But how many in here have avoided bad trades, losing trades in their account by seeing someone else's view and then noticing something you didn't when you were considering the position. I'll raise my hand. Okay, I'll raise, and you know what? You know why you don't notice it is because it wasn't done. But if you had done it, it definitely would have affected your performance. So it doesn't show up on the P&L that you avoided a bad idea that you had, but it's as important as a winning trade. And if you don't have any sounding boards or people to work with, the greatest traders all had a network of people that they worked with. In the old Wall Street days, they had squawk boxes and everyone would gather around to hear what the analysts were saying on the floor. Guys were sharing ideas of where are the stops, this and that, where's your point and figure. So, you know what? No man is an island, especially in this business. That's what I believe. So, Friday is a great day to join. I know a lot of you guys don't show up at the beginning because I'm really the only one kind of outright saying, you know what, you need to have this in your arsenal. Okay. I've been around, I've seen what's out there, and tough to beat the team that Blake and Steve and Stell put together, in my view. In my extremely accurate and humble opinion. So it's been a great week. I'm looking forward to working with everyone this summer. I know the whole team is. And do yourself a favor and try us out for the summer. I don't think it's going to be a dull summer, not with President Trump. So count on some nice moves happening. The dollar, everyone's been waiting for a dollar correction for a long time. So here we are. Everyone wanted volatility. Everyone complaining there's no volatility. Well, you have it now, don't you? So let's max out on it. And that's my 10 minutes of ranting and raving. And there's no one better at it, especially in the old days, than Blake Morrow, than ranting and raving and trading. How are you, bro?
Hey, good morning.
Yeah. Oh gosh, you sound so chipper. Scared
I'm
me.
not. It's just Friday. I
Oh,
guess.
you're an actor.
Yeah, I'm acting. I'm acting chipper because it's Friday.
Yeah.
I mean, I'm just happy that it's Friday, but yeah, I'm awake and all is good. How are you doing?
Good, buddy. I mean, it's going to be nice to see the dollar resolve itself and, have a different side of the market. I mean, if it does, I mean, I've been fooled. I get fooled every day by something. But it's going to be nice if the dollar really is breaking down. The blog gave people weeks to prepare for this. Actually, even though, when you guys put out a research piece, it doesn't mean that it has to happen the next day. So that wedge that you guys showed on the dollar index, I think we're right on the precipice of it right here, Blake, aren't we?
We are, and I'm gonna talk about that this morning, and actually, the guys in my office are talking about the dollar. Goonlock had mentioned the dollar at really key support, and
Yeah.
I'll show everybody what we're talking about. But first, I got to talk about the Australia 200. And the reason why I'm going to talk about it is because well, it's kind of nice because I never actually look at it, but Doji Hunter in our chat room asked if I could look at it today, and so before I forget,
Yeah.
I wanted to take a look at it because it's just one of those situations. If I don't look at it now, I'll forget about it, and I'll get off the webinar. Sorry. I'll get off the webinar and I won't be looking, and I'll totally forget about it. So let's just take a look. So if I'm looking at, like, in this case, an index that I've never really done any type of analysis on, I'm going to go ahead and take a look at the weekly charts first, and then work my way back. So the first thing I'll notice with the Australia 200 is that we haven't taken out the all-time highs, which were obviously from back in 2007. We are approaching those highs, and not saying that we can't break those highs, but we are not there yet. one of the other things that just right off the bat, I'll notice is that we have, obviously just a bigger channel that's probably in development. Looks like something like this, all right, which would take us right up into those highs. Now, if you look at the lower end of that, it looks like we do have a channel pretty well established, right?
Nice.
You can, yeah, I mean, the upper end of the channel is going to come in towards those all-time highs. So what does that mean to you, or what does that mean to me? It means that we could probably go a little higher, but I would think that, if the U.S. equity markets continue on track to new highs and the S&P is going to 3,000, then that means that the Australia 200
Be the last one to the party.
I mean, we might
That's what you're thinking.
we might retest these previous highs. I think it is entirely possible. So let's go over to the weekly or the daily chart, excuse me. And if you look at extensions, we're past the 127% extension. The 161% extension comes in right at 7,000. So, I mean, we're a little overbought on the daily charts, a little divergent, but that doesn't mean that we can't go higher. And you think about like what we have ahead. Well, we have a possible China-U.S. trade deal, right? And if we have a U.S.-China trade deal, chances are the S&P is going to be trading probably above 3,000. You can go and look at the S&P, it looks like we're going to 3,000 or maybe even, a little bit beyond that. So if that's the case, I would assume that a China-U.S. trade deal is, the Australian 200 index is probably going to cheer any U.S.-China trade deal. So, there's, I think, a good chance that we, make it to 6,900 and maybe even close to 7,000. Now, personally, if I was long, I would be thinking, okay, these are like exit areas for me, like to take profits. That's what I would be thinking. Could we go higher? Sure. I'm just talking about, here in the next, coming weeks or so. So with the extension, it takes us all the way up to as much as 7,000 in the Australian 200. Now, I don't know if I need to dive any deeper than that, other than we are, at the 127% extension or holding above. Near term, I guess we would have some support down here. I'll do this. I think this is your pretty big support for bulls, and a break below 65.20, so basically 6,500 in the Australian index, the 200 index, that would probably be a bearish event. But while we're above that whole zone, I can't imagine trying to be on the short side of this index right now. And like I said, any positive developments between the U.S. and China, and just taking into account that we are going into this election cycle, and if there's anybody that wants to put together a deal now, it's probably President Trump. So realistically, some sort of deal is going to get done. And when that does happen, I'm assuming the Australia 200 will at least spike into that resistance, whether it's 6,900 or 7,000 on the index. So, which again would take us towards these channel highs and all-time highs. Okay. All right. So Doji, I hope that helped you. And he said in the chat room, he says, many thanks, Blaker, for the Aussie 200. You're welcome. All right. So let's talk about the FX market. And let me talk a little bit about what I did last night. And I feel like I got kind of lucky. So if you were looking at bonds at the end of the day yesterday, okay, and I have to think about my analysis here. So last night, we had this spike up in the bond market. Yesterday I was doing my end of day analysis. We're pushing higher in this flag. You can see the flag pattern like this. So we're pushing higher, and but I knew that the relative strength on the daily chart was overbought. I knew it was divergent. And as I was doing analysis, the bond market, right at the end of the session, before the close, it started to reverse, and we saw this like move. You can see here. You saw this move in the bonds. The bond market started to sell off. Yields started to rally, and I'm like, oh crap. Maybe this is the bond market really suggesting that we're going to see some profit taking here. So what I did immediately, I went long the dollar yen. I told everybody in the chat room I'm going to get long some dollar yen. And the reason why I was getting long the dollar yen, if you didn't know, you'd have to go. If you look at ForexAnalytix, just read my end of day analysis. Well, I'll take you over to it. Dollar yen, basic technical analysis. You go over to the daily chart. Says the U.S. dollar Japanese yen broke down under pressure with yields falling, gold rallying. The natural path of least resistance for the pair, it was slower. We must note that the flag pattern had started in April of this year, arguably has completed as we near the 107.25 level. The other flag pattern, which started at the end of May, still points towards 106.50. Oh, I'm sorry. This was the chart of the day yesterday as well. Daily RSI is oversold, so bears should start to be a little careful as well. That was my analysis from last night, and I knew we were down at 107. This 107.28, wherever we were at the time, and so I bought the dollar yen, and I put my stops below 107. Then in Asian trade, the Aussie started, or the U.S. dollar Japanese yen started drifting lower. And it started drifting lower because there was news that Donald Trump had authorized an attack on Iran, then backed away from it. Dollar yen came under some pressure. And I said, well, you know what? If I'm going to get stopped out below 107, I'm just going to get stopped out. So I put a stop in. I put a limit in overnight at 107.80 or 107.48, excuse me. And I got right where we're at right now, by the way. I got tripped on my limit by the time I got up. So good news is I made money. It wasn't great risk reward. I put my limit kind of close because I was like, well, if it just gets stopped out over here on a Friday, I'll take it. And when I woke up and I looked at my phone and I saw my orders have been filled, I immediately thought I got stopped out. But what happened is I ended up getting limited out, which I was happy about that. So I consider myself pretty lucky. Also, what I feel lucky about is when we were trading around 14.10 in gold, I took profits in gold at 14.10, and if you look at the patterns in play that happen right here. I happened to be in front of the computer. I saw the spike up. There's post that Iran news, and I took it off, and I took the Aussie off too, because I figured, well, the Aussie dollar just completed the inverted head and shoulder pattern. Actually, if you look at the Asian session update,
nice pattern in play, Blake. And I know people, they love immediate gratification. So that happened in what, 2-3 days from entry to exit?
Yeah, and I think the Aussie still has further to go, because I still think gold has.
I was talking about the gold, yeah.
Oh,
You're
yeah,
out.
and I do still think gold has more to go, but
Nice.
we're gonna consolidate after having a huge, I don't know what the percentage move was in gold the last couple of days, but I would assume it's about 6%, maybe. I mean,
You haven't seen a move like this in a long time.
Yeah, we haven't. I mean, you look at what I mean. This is
when's the last time you've seen gold up $30?
Yeah, I know. Yeah, right.
Yeah.
And I mean, I remember maybe about 10 years ago when gold would move like 40, $50 in a day, but those are pretty aggressive moves. And yeah, I mean, these kind of moves, we're going to have to work off some overbought conditions, which I think this 5% move in gold over the last couple of days it calls for a consolidation, but I still think that gold's actually moving higher. But therefore, I wanted to take some profits. I can always look for re-entry, and and that's what I'm going to be looking for as we head into the end of the week. So it was nice to capture some profits into the end of the week, and I think it makes sense to kind of take pause, and we'll get to reevaluate all of our charts going into this next week. But I do still think that gold is going a lot higher.
Never go broke taking profits any day of the week, my friend.
No, I 100% agree with that. And one of the other things I want to point out with gold before I leave it with Steve, and it sounds like Andre's here too, but before I leave it with the rest of the team, is that as long as gold closes above this 1375, 1380 level, you can see this pink magenta line that you see here.
Pinker.
As long as we close above that by the end of the week, I think gold has a lot higher to go. So
thanks for using my family colors.
Oh, well,
pink.
Exactly what I was thinking is Dale Magenta. Dale Magenta Erd.
Yeah, okay, I like that. I'll change my name. That'll be my FX name.
Great.
Dale Magenta.
Magenta
It sounds like a someone that might be in a porno flick or something. Anyway, thanks.
You just wish. You wish.
Geriatric porno.
Oh my God. I'm gonna barf on myself. So excuse me while I go puke on myself. All right. Well, guys and gals, I hope you guys had a great week this week. For me, it was a good week. Hope you guys had a great and lucrative week. Remember, if you are not part of the ForexAnalytix community, and you're like, well, how can I be part of it? Make sure you get in touch with Forest Park FX. They are our sponsors. They're also they're sponsors for this webinar, but we've been working with them for the last couple of years, and they will introduce you to all sorts of brokerage firms and ones that will be more suited to fit your needs. So if you're in the US and you trade and you don't get cash back rebates, then make sure you contact them. If you are outside of the US and you're like, well, I'd like to be part of the reimbursement program so I could be involved with ForexAnalytix, maybe even for free, you can contact them here and find out more. So make sure you reach out to them. And I'm going to pass it over to Steve before the Canadian retail. Is it Canadian retail sales that are coming out today? Yeah, Canadian retail sales. So
they're higher, Blake, because a lot of people have bought Raptor souvenirs.
Is that it? Okay.
Yeah.
Hello, Blake. We don't have Steve today.
Oh, we don't have Steve. So Andre, you're coming in. Well, you know what? So
you can stay for a while to cover. Yeah.
Well, yeah, I'll stay here to cover the Canadian news. So here's the thing about
that Steve has been taking a lot of time off.
He is a slacker. Don't let him tell you otherwise.
Now I know why he bought that new car. He's out gallivanting around when he should be in here doing a rundown.
Yes, I know. It's like somebody's got to work around here. So as far as the dollar CAD, and let me take a step back really quick before this news comes out. I want to tell you that this is probably one of the more confusing pairs that I've been watching as of late. The false breakdown below this this trend line and below the 200-day, then the rip back into the channel, then the reversal again. It's really had me sidelined. I look at it now, and my 2 cents are this: as long as we are below this red line here, you can see this, not this one. As long as we're below the breakdown point, you got to be bearish. I mean, I assume that any rally back up to 132.25, I would sell. So even if we get some weak Canadian retail sales numbers and the dollar CAD rips back up here, I would use it to sell. If I was trading today, and I don't think I'm going to be trading it, I'm just telling you that if I was if you provoked me to trade, if you provoked me to trade, I'd be looking at something like this, right? Oops. And then I would be looking for a move down like that. Hold on. Okay. So that's what I would be thinking if I was going to trade the dollar CAD. But overall, I think it's a pretty confusing pair, and I don't have a good feeling for it. But one of the other things I do want to mention is that with stocks at all-time highs, and it looks like that we're going to at least try to challenge 3,000 in the S&P, that usually bodes well for commodity currencies. So the Canadian should continue to strengthen as the S&P moves higher overall. Okay. This is going to be a good pair to be on the long side of at some point when or if we ever see some risk aversion. And I don't know what happened to my.
You're good.
Oh, there it is. Okay. There's a data flash. Hold on, let me. We're gonna push this over. We're gonna go over to a 1 minute chart, and let me reset. Here we go, guys. Here. 0.2%, core is 0.3%. That's what the market's looking for. If it's weak, it's weak. 0.1. See if we can push up to 132. Whoops. See if we can push up to that 132.20 level. That might not be a bad area to be on the short side if we can get up there. But it is a little weaker Canadian number, so let's see if we can do it up there.
I was wrong about Raptor souvenirs, I guess.
Yes, you were wrong about the Raptor souvenirs.
Thought that would lift it, but first NBA title in Canada didn't lift it. I don't know.
Yeah, I mean,
what do they want?
No one wants to buy jerseys. I mean, what's up with that? That's because everybody's a Phoenix Suns fan. Wait, that would be no one. Never mind.
Kevin Johnson.
Hey, don't disrespect Charles Barkley.
Steve is here, look, and we were talking about him.
He works today. Oh, look at that. He works. We didn't think you were working. We have Andre here. We heard that you weren't going to be working at all today, so you're taking the whole day off, and so
no. I made it. Children's obligations. You know it better than I. You've been through it for much too many years, right?
Well, I don't.
Yeah, twice as much.
I don't take care of my kids, so that's
yeah, right.
Never
missed an athletic event.
I let my kids eat ramen noodles, and they have to walk to school every day.
It's called the Child Protective Agency.
Yeah, that's it. Ramen noodles for everybody. Okay. Anyway, well, Steve, Andre, Coach, I'm going to pass it over to you guys.
Have a great weekend, buddy.
TGIF, everyone. All right, we'll see you on Monday.
Hey, Steve.
Hey, Coach.
Hey, Steve, can you do me a favor and start off with that real long-term U.S. dollar yen chart and tell me if it poked through the bottom of that line that you were showing? I don't know, it's like a 3-year chart or so on the yen. Is that it?
Yeah. No, we are clearly below it. Yeah.
Oh, okay. So it broke down last week, actually. Oh, no, this week. Oh,
yeah.
Okay.
And now we've also broken down from the 61.8 of this.
Yeah, I see that too.
Spike low, so it doesn't look good. I mean, the yen is clearly following not risk, but yields, which makes sense. Yes, exactly. This is to be expected. But what I was writing on the chat room yesterday is that this decoupling of, if you remember, I also showed a relationship between the S&P and bonds last week, that we've had, a usual inverse correlation, or if you want to compare the S&P with yields and not with the bond prices, usually it's, they move in tandem. And, there's been some time now that we actually have an inverse correlation between them. And that is why we see this strange dynamic between USD yen and S&P as well. And what I was saying yesterday is that I believe that this is a temporary phenomenon that is not going to go on.
I'm long.
For that long. And when this divergence will need to be, covered. I think that the vast majority of the move is going to happen from the side of the S&P. So bottom line, I wasn't here, so I have no idea what you talked about. There is, unquestionably, indices are strong. We were also mentioning yesterday that we might even move towards 3,150. But I would be very careful there, because I do believe that people that are still long the indices are probably in the phase that we describe it as collecting pennies in front of the upcoming train, right? In front of the steamroller, because at some point the markets will realize that none of what they perceive as bullish. So, for example, nothing that has to do with the shift in monetary policy towards more accommodative is going to be enough to in essence, excuse to make up for the valuations that we currently have if we have an economy that is going into a recession. Okay, so I do think that within 1 year we're going to be a lot lower than where we currently are, but not yet. I mean, for the time being, it's clear that all indices remain bullish. We've broken above most of them, created bull flags. We've broken above them, and we can easily push higher another 5%, 10% perhaps. I mean, let's measure it. Yeah, like let's say we have 6.5% towards what I was looking for. So yeah, we can definitely do that for the time being. Coach, I wasn't here, and Zoom. If you're not here, I can see the
I'm
questions.
here.
No, I mean I can see the questions or the chat that was before I joined. So if you want to give me some questions, so I can briefly go over them, and then I'm going to pass it to Andre, because Andre has some stuff for us. And as with Gregor, he's usually here once per week, and I think it's a good opportunity to have a viewpoint of what he's looking at. Harmonics is, excellent in pinpointing reversal areas, reversal points in a market, and is also good in measuring objectives. So I do think that at least once per week we should have, Gregor's and Andres' viewpoint. So give me any questions that we have.
Steve, can you please cover Aussie Kiwi? And that's it, really. Were some comments to Blake, but I see 2 participants are raising their hand, and I think that was it. So
Okay, so let's have a look at Aussie Kiwi. And here it is. So Aussie Kiwi, I wouldn't be turning bearish for obvious reasons, because you see, we've spent so much time correcting lower, but in essence, we've just corrected like 50% of the move that we got prior to that. And that move was a move out of a descending wedge. So bottom line, my intuition tells me that there should be at least one more leg higher, likely towards that 61.8%, and also horizontal support resistance area just above 108. So that is my viewpoint. So I would be, I would be cautiously bullish and constructive as long as the move lower is unfolding in the way it does. And what is this way? It's extremely slow, choppy, and overlapping. All those are characteristics that you find in corrective moves and not in impulsive moves. So I would be quite surprised if we just accelerate lower from here. Nothing is impossible with the markets, but what I see here tells me that at some point there is going to be at least one more leg higher before we test the lows. Okay. Keep in mind that if we keep dripping lower, the next area of support is the 61.8 at 1045. Okay, so that is what I think about the Aussie Kiwi. I bet that Blake covered. Did Blake cover the majors codes like the euro and the cable? What did he cover?
he came in because someone from the chat room wanted to look at the Australian All Ordinaries Index.
Mm-hmm.
So he spent a lot of time there. He talked about his long yen scalp. He talked about getting out of the pattern and play long gold and booking
Okay,
it.
so he did talk about the price action that we had in gold. Remember,
gold, but he didn't spend much time on euro or the majors.
Yeah, remember that pre FOMC, I had specifically said that if we break above 1360, I wouldn't be surprised if we tested 1400 within a day.
Yeah,
It actually took a little bit longer than a day, but
not
on the other
much.
hand, but on the other hand, we didn't test 1400. We actually made it to 1412.
10. Oh, okay.
Yeah. Now the question
All right.
is this enough of a move? In my opinion, no. So I would expect that if today's candle is kind of exhaustive, which is there is a likelihood. I mean, we were very early at the highs, and then at some point we were even unchanged. If we see a pullback here, I would assume that at least the first time we test this 1360 area, if we even go as low as that, there's going to be a lot of buying interest. So I think that no matter what happens to gold, like in the medium to long term, there should be at least another higher high from here. That's my assumption.
I agree. Look at the RSI reading.
Yeah, that is my assumption. So bottom line, if you want to try to fade it for a shorter move, perhaps to retest the breakout point, okay, I understand that. There is an appealing risk reward. But I would definitely not be treating this as a false break higher. I would be looking to buy the dip. Okay, so that's my point of view in this, and I don't need to spend more time in it. And keep in mind, we were talking about copper. Another thing I wanted to show, copper, finding it quite hard of breaking above this horizontal support resistance area, also a potentially bear flag resistance. So be a little bit careful with copper. Here, I said it yesterday as well that we were testing resistance, and as it seems, we've now spent like 4 days toying around with that area, and we don't seem to be having the momentum required to break it. So I wouldn't be surprised if we end up instead, testing that support area. Now, just a brief outlook in what is happening with cryptos here. Bitcoin has now reached my next objective. Those of you that read the end of week analysis, you know it. So, we've now achieved this 161.8% extension and this horizontal support resistance area, while Ethereum seems to be lagging, but breaking above this triangle. So I think that cryptocurrencies look quite constructive. Bitcoin is on resistance at the moment, but considering that Ethereum is just making the move, I think that they still are looking, quite nicely.
Let's see Bitcoin.
Oh, I showed it to you.
Oh, I thought you showed
Here
Ethereum.
it is.
Can you show 4 hour for a minute? Because we have a 3 drive on the daily.
Yeah.
And okay, that's it. Yeah. All right. Thank you. Thank you so much.
So, and one last thing.
I could have gone to my charts. I don't know. I'd just like to make it work.
No problem with that. And
we're getting a question about the Nikkei here from Glenn.
Oh yeah, absolutely.
And I don't know what Tom is saying. Tom George, hi guys, thank you for the guest speaker, where his explanation of deflation was very I think you mean insightful.
He means about Mark, I guess.
Yeah, I've been hearing about this deflationary scenario for 10 years now, and the QE is forever. So I guess the point is, I think Thomas is saying the deflation never happens because of the Fed, and it never will because of the Fed.
Okay,
I think that's what he's assuming.
Now this. Do we have a guest today, by the way?
No.
Okay, that is excellent, which means that I don't eat from Andre's time. But
yeah,
let me put things in perspective, because whenever I hear the word deflation,
I'll be back in a minute, Steve.
I want to start hitting my head on a concrete wall. Okay, simply because there are two assumptions from economics that make no sense. One is that if you don't have a little bit of inflation, that's a bad thing. What is the logic behind it? I mean, I've been taught about that since the 90s when I was in first in university. The logic behind it is because if people know that their money are not losing any value, or even worse, if you actually have deflation, so your money are actually gaining value as time passes, then you have no incentive of actually using that money, but you have an incentive to hoard them. Okay, that is the logic behind it, which is completely flawed. Simply speaking, let's take the US as an example, which is a developed economy and has many similar characteristics with all the developed economies. GDP is like 70% roughly consumption. Okay, now think about it. From whatever you've been consuming, okay, would you actually be buying the television you like to buy this year, next year, just because it would cost you in real value, let's say $15 less or $10 less or even less than that? Would you be holding off consuming something just because in real monetary terms it's going to be a little bit less expensive next year? In my opinion, that's BS. Second of all, between 1850 and like 1950, 100 of the best years that we probably had in developed economies, and especially in the US, having to do with the big boom, industrialization, standard of living increasing significantly year by the year, the US becoming a superpower, and the best performing industrial nation, becoming the biggest creditor, not debtor, on the planet. There was actually deflation. Okay. So during 100 years of deflation, the US, as an example, was performing magnificently. It had its best 100 years. Okay. It went from spinning off as part of the, of Great Britain to becoming number one world power. Okay. And helping in getting rid of Hitler and everything else. So, all that is BS. Did we actually suffer from deflation? Deflation? No. We had a few months of deflationary pressures during the previous financial crisis. A few months. Other than that, inflation, even with the flawed method that the Fed is measuring it, which is definitely underscoring inflation by a lot, is at 2%. Okay, roughly at 2%, which is more than it should be. I mean, all central banks, theoretically speaking, have a mandate, which is what? Price stability. Last time I was in university and was doing mathematics, stable prices means zero change in prices. And now we've gone to the point that we consider an increase in prices of 2% per year, which anybody that knows how compounding works is not that little, that this is price stability. And soon enough, they're going to try to explain why 3% is keeping price stability. Okay, so there is absolutely no fear of deflation, in my opinion, quite the opposite. And everybody that lives out there in the real life and goes doing the shopping and taking care of kids and having to pay for education or healthcare or whatever else, they know that money are really losing value as the years pass by. Okay, so whoever is trying to persuade me that there is a fear of deflation, there's no way I'm buying that. End of story. That's it. Now, is it deflationary, the fact that we have aging population? Yes, it absolutely is deflationary, but in a vacuum, right? So if everything was, if ceteris paribus, you kept everything the same and you just had to measure what is the effect of aging population, yes, that effect is deflationary, but is it the only force to price levels? Absolutely not. Okay, so although I agree that demographics are deflationary, I think that with the way we've been treating monetary policy, there is absolutely no fear that anything like that will happen. Hyperinflation looks to me in the medium to long term a bigger probability of happening when almost nobody expects it. Okay, keep in mind that central banks don't even stress test for that. If they did, there would be absolutely no bank that would be solvent. I mean, under such a scenario. Okay, so keep that in mind. Andre, let me promote you, mate, and pass the screen. Let's see.
I'm here.
What's his new title now that you're promoting him?
Admiral. Admiral Andre.
So you're taking him out of the galley that he started our boat on fire with, and you're making him the admiral of the whole fleet, huh?
Better than a pirate, for sure.
It's a pirate ship. Anyway, how you doing, buddy?
I'm very well, thank you very much.
Good.
So can I take the screen?
Absolutely.
Yeah.
Absolutely.
You're the admiral. I don't even feel like I'm the captain of my own ship anymore.
Okay, I think it's this one. Okay. We have someone asking for Norwegian krone and for DAX on our chat, and I want to try to give my point there.
Yeah, needless to say, I'm short USD NOK, so perhaps they had heard that. Needless to say, I'm still treating every dollar pair as a sell on rallies, as I said. So for the listeners, that has not changed. Same applies to the USD NOK. We've now broken below that channel that I was showing for a long time. A retest of that broken channel support, in my opinion, is going to be an excellent opportunity for somebody to be short and for me to add to my position, because I have a position from a little bit higher than 870, but it's half a position. So I'm totally fine with making it a full position if we retrace somewhat. Although from what I see from the price action here, I wouldn't be surprised if we go back to the previous chart that you were showing. Was that a weekly?
That was a 12 hours time frame chart.
Yeah, look at that nice evening star formation there. Yeah. Okay.
Yeah. And this was the next one. So that previous one.
So perhaps
127 extension. It was here, formed here. The market has printed those highs above, and I was checking this shape here because I missed that shape, and I want to talk about that shape in a few seconds.
Go ahead, Andre. It's yours.
And this was the bullish shark at 161.8. The market has reacted very well there in that it has printed this cipher pattern, and the result for this pattern is this live chart. So we have the market nailing the 78% retracement, printing at that time the fractal, the 4 hours fractal, and it has sunk immediately below the daily support, below the 200 moving average, and breaking that ascending channel that Steve has mentioned previously. So we are now facing the golden fib, we are now rejecting the golden fib, and we are approaching the 224 extension, which may put some pressure. Actually, we see the market feeling that pressure already. So I will not be surprised with a bounce, eventually retesting or trying to retest these daily broken supports at some point. We never know what the market will print here, but the pattern will complete a 224 extension, previous structure highs there. At the same time, based on the most recent events and external events, I believe also that the market can ignore that level and sink immediately, retesting this fractal support again without a bounce from this level. The shape that I want to talk about is this. Actually, it's a perfect double top here. We have a technical double top, and the reason why I want to call your attention to this shape, because it's very, very common. We just need our high to identify the shape, because we need the perfect V shape and a retest of the previous closes from the first top and if the market rejects to trade above, as soon as the market violates this bottom, the next zone, the market needs to sink below it. So usually we take, let's say, let me share what I take. I take the close prices and I project I take the 200% extension for a decent projection below the next. So let's use, I use let's say the 200% extension Fibonacci level from the body close prices between the neck and the tops. In this case, I project that to the 200% extension. As we can see, the market has already filled that Fibonacci extension. For those who use the wicks to extend and to measure those, to measure the default targets for those patterns, we are now feeling that pressure, nailing that Fibonacci extension, the 200% Fibonacci extension from the head to the neck projected below. What the market has printed in the meanwhile, it was a support below the neck, validating the pattern, and then a bounce to the 78% retracement. Okay, we have a cipher here, but if I was searching for the 61.8 retracement there, just a few points below, this is also the 26.18 trade setup. And I have a lot of people trying to ask me, Andre, what is that 26.18? You share a lot of those patterns. What is that? And basically, I search for a perfect technical double top with a perfect V shape and a violation of the neck zone. I need to wait for a support. In this case, the market has used the 127 extension from this first swing, which helps me to identify the potential cipher pattern, if the market achieves that level. But it helps me to identify also the potential bounce to the golden fib, which will help me to identify the 26.18. So the 26.18, it's nothing more than a double. Let me try to use this text just to keep things clear. It's nothing more than a double top followed by the 61.8 retracement. So that puts usually we use the 26.18 setup, but it's nothing more than a double top or a double bottom followed by the 61.8 retracement. It's a powerful setup, and which allows us to create a scenario with a friendly risk-reward approach. If we trade from the golden fib, usually I use the first target at the bottom of the previous support, and I need to respect those highs. So if I trade for 1.24% below my initial or my entry, it makes no sense to use more risk for that trade, but you can get the picture. We can create a friendly scenario to engage the market, because usually the market will extend, and the default projection for that pattern is the most common ABCD pattern. So basically we project the previous swing from the golden fib. Obviously the market has been traded above. Yes.
Do you have a parameter for R to R on any of your patterns before you take the trades, or put
yes.
the pattern in place?
You are talking about the risk reward for each one of those. Yes, we have. First of all, we have the fractals above and below those previous support and resistance levels that we tend to respect. And I have the default target for the pattern. And let me try to. I think I get the point here on Norwegian krone. Let me try to push another one. DAX, because we have also someone asking for DAX. I lost that one.
So would you say that your average reward is 3 to 1, 4 to 1?
That will depend the pattern that you trade, and that will depend the structure that we have previously.
You
know,
take
so
one-to-ones?
I take one-to-ones for sure. I can decrease my position size, but I can take a one-to-one trade setup with no problem with it. So obviously, if you ask me if I prefer, if I have three scenarios available to trade and I need to choose one or two, obviously I will choose the ones that offers me best and friendly risk reward approach for sure, and I will ignore the one that offers me the one-to-one risk reward. But I have no issues to engage the pattern if the patterns, if let's say, if that will depend on the confidence that you have on the pattern. So if you feel comfortable trading you don't need to trade a one-to-one risk reward, a three drives pattern, obviously. And the reason
there's anything wrong with it. I mean,
no, there's nothing wrong if we know how to manage and how to leverage and how to manage and how to adjust our position size. I have a lot of people creating an habit to engage the markets constantly with the same units or lots or position size, without leveraging that position size, considering the time frame, considering the pattern they are trading. So let me try to answer your question with a technical approach with a live chart. So I have here we have here that these inverted or kind of inverted head and shoulders and the violation of this descending structure with a breakout of this structure. Does this situation offers me a friendly risk reward to trade? Not at all. Not at all. But I can try to engage this setup. Okay, I can try to engage these breakouts. Or I can try to respect these. I can try to respect these lows and try to put a stop below these lows. Always considering that I have a weekly fractal support there. The market can easily violate this support and hunt my stops below. I don't have a friendly situation to trade. So let's say I have an engagement point. My target will be the previous structure resistance at the highs. Let me use this. Can I use? Does it make sense to use a one-to-one risk reward where my stops will be positioned right above, a few points above the weekly support? In my point of view, it makes no sense. A one-to-one risk reward. I can try to minimize that, but considering that the market can fail me because I have nothing to support my motive to put my stops there. When I trade an harmonic, the things will change a little bit because I have a specific target that usually, and let me push this euro versus Australian dollar because it's one of the charts that is trading the completion point or around the completion point for one eventual pushback. So I have one completion point, I have one entry price level for my pattern that allows me to identify my risk, my reward positioned below. So this is 269 points, 270 points below my entry. So I know that I do never enter the market to lose more than what I expect to win. So I have also this monthly fractal resistance here, which is dramatic because it was a very extended week printing that fractal, and we need to respect those fractals. I have my targets defined already. I can't lose more than that, than 269 points. So usually on a shark pattern that will put me trading the next pressure level for the shark pattern. I believe I talked about that earlier, and that makes no sense. So I can't engage a shark pattern printed at 168 extension with a one-to-one risk reward approach, because if that pattern fails me, eventually it will extend to the 224 extension, which is the next completion point. So I need to manage the risk for this pattern. What I know is usually if the pattern needs to work, the market will react very close to this Fibonacci level, and it will fall from that level. So I can try to minimize my risk and try to create a situation that allows me to engage the market in the expected direction. Always considering that in this case scenario, this is a daily time frame on euro versus Australian dollar, and we are breaking above this previous structure. So I believe there's room above. Nothing assures me that, but at this point, I will not ignore the possibility to see euro versus Australian dollar trading above 166, and then a retest of this. Let's try to measure one eventual push above at 166, the 38% retracement, which is the minimum expectation for the pattern, if formed, will force the price to retest these daily and measure weekly resistance and support levels, which at some point makes sense. So a violation of the structure and then a retest of the structure. Eventually, the market will keep respecting this ascending trend line for now. As soon as the market violates this structure, eventually the market will sink or will pull back, retesting this structure there.
Thank you.
So it's trying to simplify the answer.
Complicated.
Yeah, the complicated answer. Okay. That will depend the pattern that we have, and that will depend the targets for that pattern. So we use the Fibonacci's. Some people use the price previous highs and lows, the price structure to define their targets. Usually I use both.
Yeah, profit risk ratio is never in cement, okay? And you have a market moving your way and you take partial profits and you move your stop to BE, and your profit risk ratio is ad infinitum. So, I know when I go into a trade, Andre, my risk reward ratio sometimes may be worse than 1-to-1 because I'll scale in. Yeah. And I like to let trades breathe initially. And then as soon as I can adjust the RR with things moving in my favor, it changes the whole ball game. Yeah.
It's an option. We need to do something, that's for sure. We can't engage the market just like a roulette, and like a casino, and let the things roll and without figuring out. Adjust. Yeah, we need to adjust the things and
assess.
Reassess and actually readjust, because the market, we are forced sometimes to see
the market's like an amoeba. It's a living organism.
It's a living organism. It's connected to people, and it will react based on people actions inside the market. We are included on those.
I always wanted to be part of an amoeba.
Oh yeah.
Or how about a paramecium?
Because that most of the retail traders tends to think they don't participate on the market. They don't make things.
Oh, they're liquid. We're all liquidity
providers. Yes, we are. I believe we are. Yes, not as Blake and as other traders for sure, working for their companies. Agitators, as I call them, they are market agitators at some point. But we are here. We participate. We put our stops to be hunted by them, and they will hunt our stops, and we participate in the game. So, and sometimes we're
hunted.
We are hunted, but sometimes
we could be the hunter.
And you avoid to be hunted, and that's why I like ForexAnalytix, because being there surrounded with all those traders and all the community in general, not only us as analysts, but all the entire community working together. It's amazing how can you identify those moments inside the market, and it's amazing. Well, we don't have an interview, but we have to finish because we don't have all day. Dale,
Okay,
and you need to rest. And because nothing specific, I don't know. I have 20 charts to show you, but I don't have time to show you that.
Why don't you wrap it with your favorite here?
No, just to invite those who are here, well, to join us and to participate and to be there and to check and to share your ideas with us. And it's always interesting to see what people have to say about our work, and to share and to see what they have to share with us. We are constantly learning about people habits and routines, and it's awesome to get synced with that. To finish, we have silver now rejecting the golden fib and retesting the right shoulder. This was a pattern shared among our communities before that momentum happened, and we are retesting that level. So we are retesting. For me, it's a crucial level. It's also the previous weekly fractal resistance level, previous structure support, the neck for this double top. So we are approaching, actually we are retesting exactly that. We are nailing that neck zone with that golden fib. So I don't expect silver to keep trading higher, at least for now. I can see a period of consolidation here. I took a short, I took a long,
nice.
Once the market started to print this right shoulder, I took the odds there before the market prints me this shark pattern. And to actually conclude my thoughts and my ideas here, what is a shark pattern? It's a false breakout followed by an impulsive momentum. That impulsive momentum should break the most recent descending, in this case, descending structure. Breaking that structure, we will search for the 161 and the 224 extension for the completion point. That will, if the market finds support at 50% retracement, that will print the 5-0 sequence. Let me try to show you in a kind of a different color, not so different, but keep the idea. If the market finds support at the 50% retracement, we want to buy that market. We have also a kind of, actually it's a false 2618 because the market didn't touch the golden fib. But keep this idea, the bearish shark pattern at the end, at targets, will offer a bullish opportunity. So I saw the possibility to engage the 5-0 after the shark and forming the potential right shoulder. So we are now approaching the 200% Fibonacci extension, which is the default projection for the heads and shoulders, the inverted head and shoulders pattern, the weekly fractal resistance.
Okay.
Have a nice weekend, everyone. Thank you very much, Dale.
All right, Andre, have a great weekend. Really love your work. And thank you, everybody. Remember, Friday is a great day to sign up. You have all weekend to learn how to navigate it. There are new videos right on the site to show you where everything is. Don't just count your pips, count your blessings. I have a strong lineup for next week, again, as guests. And, you know, we're always a decent lineup. So that's a wrap for us, and have a great weekend. Thanks for hanging out with us this week, and let's have a great summer together. Adios.
Thank you.